this whole time we've been together, I've been talking about what I believe to be the greatest risk to Bitcoin in its bull market is the Federal Reserve. That has not changed, and that continues right now into the end of the year. We are talking about the possibility of the Fed beginning to taper. Now, a couple of things. First of all, we don't know what they're going to do, okay? But we need to prepare for everything. Now, no, we had a terrible jobs report, right? So that gave people belief that maybe the Fed is not going to look to taper. The meeting minutes just released last week. They were setting up a taper, right? Whether or not that's in November or December, because of the horrific jobs number, hopefully it won't be in November at the November meeting. By the way, that's a big deal that we have to watch on our calendars. We have to see how that relates. November the 3rd is when we're looking at the next FOMC statement. It's going to be a big one to watch for. Now, it is true that Powell will be testifying before there. It was back in 2013 when Bernanke was testifying that he mentioned the coming taper that set off the famous taper tantrum. That's what we're going to take a look at. We're going to look at the markets and how they reacted, not only when the taper was announced. By the way, one difference was that was a surprise. When Bernanke mentioned it before Congress, the markets were not expecting that, and there was a little bit of uncertainty. We're going to look at everything, and then we're going to look at what happened when that taper actually started and how that could have actually been the cause of the top of Bitcoin in 2013. So let me just say, we do not know what's going to happen. At the same time, we need to be aware of all possibilities, and including what are the greatest risks to our projections of what we're looking at coming into the cycle peak. Now, everything that we're looking at right now says to us, well, we're in a position of power. And not only that, everything happens to be on time. I want to bring it back over here to focusing in on the taper. We're going to do that by looking at some charts together, right? By the way, let's see this. Let's start here. What was the taper tantrum, right? The Fed Chairman Bernanke suggested in May 2013. So we're going to look at May 1st when it was first announced. And we're going to look at the reaction of the stock market. By the way, it was different, the reaction of Bitcoin and the stock market at this particular period. Through the rest of the month, Bitcoin went up. Equities corrected, not too bad, about 7% or so. But that did cause and drag down the price of Bitcoin throughout the month of June, while the equities finishing corrected, right? So that was a surprise event. Equity markets got a little shook, but that's not really a big deal, right? A 7% correction. By the way, we're coming out of a correction right now in the equity markets. You see, I'm CTM all day long, but we're coming out of the correction. So, and this is just for those that are paying attention. Again, if you were on the sell impulse to go ahead and protect yourself with some type of option trade, now you just, it's basically just protection. You're getting out kind of at the same thing, right? That was in case price melted down, you would have been protected. But here we are right now. We've crossed the yellow line. We see the NASDAQ resuming, S&P looking even better over here. And that's great for Bitcoin. We want to see risk on. Fantastic for Bitcoin. Now, there are a lot of risks out there. That's what we're going to talk about right now. By the way, the 10-year over here continues to rise. And is that rising because of the potential coming taper? There's a good chance of it. That's the price action we saw from the time that Bernanke in May 2013 announced the intention to taper up until the taper began. So was that January 2014, and you saw yields actually rise until that. Let me get over there with you. All right, so here we are. Bernanke surprises the market, talks about tapering, and then you see the yields rise all the way up until right here where the taper begins. So it's also interesting to note that as the taper began, yields started coming off. What's also interesting is, as it is or whatever, we're just making observations, but Bitcoin has been tracking very closely the 10-year, including the whole mid-cycle shakeout and now resuming out. Bitcoin leading right now, but definitely tracking. So when the taper begins, are we going to see yields come off? I don't know. That did happen in 2014 as the taper, the market kind of front runs this, By the way, it causes a strong dollar. So we have to watch the dollar. That's something I'm a little concerned about. When I say concerned, what I mean, I hope you guys are all not only paying attention, but the reason I'm presenting all of this for you, because I know there are so many of you that are macro focused, and so that you could go ahead and take what I'm laying down and dive into it and sharpen it for us. One thing that I'm concerned about is that if that is what we see, and we start seeing the taper and the dollar starts reacting positively in past peaks, and now we only have two, right? We only have the 2013 and the 2017, but in both those cases, as Bitcoin was peaking, the dollar was selling off and selling off hard in each instance. Now, we've already looked at the fact that aside from this area right here, which is the dollar milkshake theory when the system's broken, that a strong dollar has not adversely affected Bitcoin at all. Actually, anytime the DXY has been strong, Bitcoin has outperformed. Nevertheless, we have to be aware of everything. Let's take a look at what happened as the taper was announced to the equity markets back in 2013. This is in May 2013. And what you're going to see over here is the equity markets had a little bit of uncertainty, off about 7%. And that was quickly bought up, right? And then as the taper began in January, you saw a lot more of a correction. So this is kind of what we're worried about over here. The Bitcoin is not immune, right? If we start seeing the equity markets correct. I know that we talked about in the past, wouldn't it be funny that if in December we saw a big correction in the equity markets, and we talked about this as everyone was watching the correction that began in September. And I was like, you know what? Listen, the markets are not crashing. More than likely, this is just going to be like, we're going to come out of this correction. That's right on time right now. And then we said, what happens though in December? What happens if that's when we see the big crash in the equity markets, and then we see Bitcoin coming down with it, and that's blamed on the top of Bitcoin? That could very well be. That could very well. By the way, Bitcoin in 2013, when that all happened, had a little bit of a different reaction. And what do I mean by that? I mean, here it is in May 2013, right? May 2013, when Bernanke goes ahead and mentions they're going to be tapering, Bitcoin continued rising all the way into June while the equity markets were correcting. And then finally that correction caught up with Bitcoin. So if we're seeing Bitcoin, if we're seeing the Fed move, we're seeing Bitcoin still rising, but equity markets correcting, we're going to have to watch very closely. That's when we lean into our trend lines to make sure that when we have a sell impulse, we're aware of it, because the equity markets falling could bring Bitcoin down. Now, there's two thoughts. There's the thought that, well, like the Fed can't taper, and that may be true. And then there's the thought that, hey, well, listen, the Fed may actually taper in order to kind of mess things up a little bit. By the way, this will be terrible for the markets. If we're talking about the Fed tapering, we're going to see yields rising. It's probably will cause a correction in the housing market. The markets are going to have a lot of fear and uncertainty. But again, it's not good for them to go one way, sharp and quick, and to see all these assets appreciating. Like the Fed does not want that either. And if they're able to cause a correction, then they're able to what? To keep this whole dance going longer. So my whole belief is that, you know what? The Fed might actually taper just so that they could go ahead and months down the line cause some type of breakage that's going to cause them to come in with a bigger bazooka of QE and push out this Fed cycle longer. Lynn Alden was also saying, well, she doesn't believe that they're going to be hiking rates. She does believe that they're going to try to taper. And she also said by the end of the year, listen, she said that after we went ahead and tweeted about this on Saturday night. So we will see whether or not that happens or doesn't. But be prepared for it. I think that this is probably the biggest risk in the markets, and why we need to be aware of what's happening when it's happening. What happens if at this meeting, on the November meeting, the Fed announces the taper? Could that set up the correction of liftoff a little bit early? It is possible. November 3rd, is that November 3rd or November 5th? Hold on, with November 3rd, right? So November 3rd, Fed says, all right, we're going to be tapering purchases in December. Might that cause the correction, as we saw last time it was announced in the equity markets, a correction? That correction, people calling the top of, but that's just the correction that we were looking for of wave 2, setting up liftoff, right? And then at the November meeting, right? See, what's interesting is all of this could very well, we're always looking at what's wrong with our thesis or what's wrong with our projection. We're so concerned about being wrong that we're checking all different theses and variants at all times and viewpoints just to make sure that we're not blinded, even though with the highest degree of confidence, everything says that we're right on time. This type of, let's say, this type of moves by the Fed would actually or could actually fit very well within our model. So just because that, we have to be aware of that also. We can't be like, we're not trying to like blindly affirm our model because we never do that actually. This is one thing though that could fit very well within and actually help us fine tune it. If we see the correction of wave 2 actually happen a little early, it could very well be because of that meeting on November 3rd. Now, there's a lot of other things that could set up different type of trajectories also. If the next jobs number is actually a beat or a good one, then the market all of a sudden might be like, oh, well, the Fed might be more willing to do this. Anyway, Greg, what's going on? Anyway, just making sure that we're aware of everything. And that includes not only what happens from here into year end, but also what happens into that first quarter 2022. All right. I'm going to go ahead and before we start looking around here at what's going on with markets. So I think we all got that, right? If there's any questions, I'll come back to it. I just want to make sure that everything is clear, that everyone is safe. That's the most important thing right now at this point of cycle over here. It's unforgiving. There's no mistakes that could be made, all right? There's not much time left potentially until we reach the cycle peak. If you make mistakes earlier on in the cycle, you have a lot of time on your side over here or enough time over here to get back and do all right. At this point, we want to get it right. That's right. That's beautiful. Thank you for that message over there. Thank you. Welcome to all those who are new, All right, let's keep going over here. By the way, if you remember on Monday's session, if you didn't see Monday's session and you're new, if you go into the announcements channel, you're going to see each video that's shared each and every day. During this session, we started talking about what would happen. Let's take a look at what happened as the taper was announced to the equity. If the Fed starts tapering, right, and what the market reaction might possibly be. It was a good, important video to get in. The market today is pricing in. And by the way, it's not like the market at the end of the day, right, is the market. And we talk about like the market might force the Fed's hand and whatever type of jargon and misinformation that the Fed continues to spew out there and trying do our best to be able to read in between the lines and play it out to find out what they're really going to do. At the end of the day, the market's the market. The market right now is pricing in a full hike by September 2022 and 2 full hikes by December 2022. Do you remember that I was talking about potentially 2022 is the year of the hiking shock, right? Now, in order to get there, for the Fed to be able to hike, the first thing they need to do to make it effective is start tapering. That's why we may get a bit of a surprise here towards the end of the year. That's why we're going to keep a close eye on it. That's why we put the work we did in on Monday to make sure as it's unfolding in real time that we have some type of awareness and we are as prepared as we could be. Now, I know it's different. If you look out there, it's not the type of information you find being shared on Bitcoin. But that's who we are and that's what we do. And we're going to make sure we do our best we can to get it right. I want to talk about some fun things right now. And then we'll get into the professors. Crash the like button, Alan. Alan, congratulations. Alan Au, 20,000 people on Signal, on Twitter, following the work that he's putting out. And the work is highly impressive. Highly impressive. No question, Alan's work is the most underrated on-chain 4-year cycle awareness work out there. And we are just so grateful here, Alan, that your time and talent is shared with us. CTM strong. So we're going to start seeing a lot of this talk coming up. And here it begins. A super cycle is happening in Bitcoin, which appears in early price discovery days. I mean, early. I mean, I feel like I don't know. Correct me if I'm wrong, but I feel like early price discovery days was over here a year ago for us as we broke out of the bull market. And that was the early price discovery days, breaking the new all-time high. And then if you remember what happened October, November, and December. But I guess people are catching up. And they're saying that cryptocurrency is to outperform commodities in 2022. Now, I don't know about that. I think 2022 is going to be a down year. Now, I'm not sure about that. And we will continue watching for all signs that we are wrong and that potentially, as we are, we don't know what's going to play out like this. We're just in the middle of wave 2. If we get into wave 2, the most important thing comes liftoff and how that looks. And then watching price, go into liftoff. And if all that is happening at that point, we're going to be not only looking and watching for our exit as focused as we could be, but watching where we're wrong. What happens if this is the super cycle? And what happens if this is the last cycle? What happens if we always have to be protected and make sure that we stay protected? And one of the ways we do that, though, is before this even occurred, we started talking about at this particular time, people would start talking about a super cycle is happening. How this is Bitcoin only up, how Bitcoin's going to $1 million. So as it's happening now, we want to make sure that we stay grounded because you're going to hear it from a lot of different places and the FOMO is going to be real and it's going to be pulling. Bernard, taking in consideration the possible Bitcoin dominant shift to the downside after wave 2 peak, would you look to do we did, Bernard, I don't know if you saw it, but we did, was it on Tuesday? We did that strong session. It's labeled Altcoins in the title. So if you go into the announcement section, take a look at that. And that was the strongest work we could give on when and what the pivot from Bitcoin into alts would look like. So go ahead and follow that one. But I mean, at the end of the day, and it was the professor who first pointed it out, it is during this move right here, right? It's during, what did Pure Vita name it? The stupid candle, like that huge move up, that right there is the place, the best place to make that move. So we're still far from that. We're still far from that happening. All right, let us continue over here, right? A couple of things I want to read through. I'm just kind of reading through the notes over here. This is a big deal. This was the Houston Firefighters Relief and Retirement Fund, $4 billion of assets taking their first position in Bitcoin. It was spread out between Bitcoin and Ethereum and $50 million into, oh yeah, it is. Oh, I'm sorry. Here we go. $25 million between the two, and they plan on adding another 50. And you all know that once you get off zero and take that first position, it doesn't stop there. They got $4 billion of assets over here. Now, this is a long-term thing. Maybe this cycle, they add another 50 billion, right? 50 million. But maybe, boom, 4 years out or in the bear market, these people are going to be on the bid. And it's not only them. This is just the Houston Firefighters. Can you imagine $4 billion in assets in just Houston Firefighters Relief and Retirement Fund? What does New York City have? What does Chicago have? What does San Francisco have? What does Los Angeles have? What does Minneapolis have? There are many. In a lot of other countries, you don't see so many big cities. In the US, there are so many big cities. There's a lot of money out there. And, boom. So, and we decided we're not going to use the ETF. We're going directly for the token. This was all done through the NYDIG. These guys are doing great work and just happy to see it producing fruits. What else? JP Morgan, these investment banks. Wow. People give institutions and institutional research way more credit than it deserves. Let us be aware and just call it as it is, right? And they're basically saying Bitcoin's renewed role as a better hedge against inflation in the eyes of investor is the main reason for the current bull run. Now, I beg to differ. The reason I beg to differ because before inflation was a thing, because inflation was not a thing up until the Fed's response in March 2020. Now, the devaluation of the dollar was definitely a thing. The way that the CPI was measuring inflation was definitely a thing. And inflation was definitely a thing because I was out there pointing it out in many different ways, but we weren't looking at the type of inflation that we were seeing ever since the Fed decided to print a massive amount of the supply, right? So before all that was even a thing, we were setting up and talking about what that next bull market was going to look like. And that bull market is looking right on time and very close to the way that we envisioned it. So I don't think that it has to do with the hedge against inflation. I just think it's Bitcoin doing Bitcoin things. But this is a good selling point. Now, I don't know if JP Morgan believes this or if JP Morgan is looking to kind of get their clients a reason to get involved, to get their clients, because the more money their clients trade, the more money they make. So is it like, all right, I see my clients have X amount of dollars holding in gold ETFs, and I want to get them to move it into some Bitcoin funds. So we're going to do that by telling them, this is, so I don't know what their motives are. I know that it's not for our or their clients' best interest, but we are going to see, especially as we see the 10-year here rising, right? And rising because why? Because inflation, right? You're going to start seeing, that's a good reason, by the way, that the Fed needs to come in and start tapering and hiking, is because of the inflation is not transitory and it's real. Anyway, narratives. And there's one more to talk about because this stuff is fun. When I read it, it's SBC, stupid big candle. There it is. Just so everyone gets one more view of it. This area over here. If you come to the daily candle, in 2003, it took, 36 or 48 hours. In 2017, 24, big stupid candle. All right, let me jump back and come back to our friend over here, Peter Thiel, talking to a think tank, right? By a policy think tank, the Linking Network. These are people who think they're really smart, right? The reason I'm saying this is because think tank. Can you imagine these people like, hey, wife, I'm a part of this. No, okay. I don't want to insult anyone. I don't mean that at all. So he's speaking. I'm just trying to paint who the audience is. And he's speaking to central banks and artificial intelligence. And he's telling them, listen to what he's telling them and how he's doing it. You're supposed to just buy Bitcoin. I feel like I've been underinvested in it. So the people watching Peter talk are like, wow, Peter thinks that he's underinvested. I must be underinvested. Wait a second, I don't even have a position. So the tech investor notes that, by the way, the secret was, so he says that Bitcoin was the investment. The secret was already known by everybody. So the people out there are like, wait a second, everyone knows the secret. I don't even have a position. I think that the answers are still to go long. And then he answers the question for them. Is it too late? Nope, you could still go long. Maybe it's still enough of a secret and he plants the seed into their head that they will be smarter because they're part of that think tank than everyone else if they go ahead and get off zero and get into that Bitcoin. And that's just the way I read the news. That's just the way I read the news. That's true. CTM is a think tank. No question about that, or at least we try to think and we try to put it all together. And just because we're on this little bit of a tangent today, this little bit of a note, PIMCO, CIO, saying that they plan on buying more Bitcoin as it's surging to all-time high over here. And this is going to be like a theme that we're seeing coming from so many different, not vantage points, from so many different sources, whether or not it's firefighters' retirement funds, whether or not it's soon to be police, teacher, blah, 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 from a million different places. The FOMO is going to get real. And people keep wondering, well, where's all the money going to come from? But people also think since Bitcoin's a $1 trillion market, it needs another $1 trillion in inflows just to get it to a true $2 trillion market. This is absolutely not correct. It was Bank of America research that when Bitcoin's trading somewhere around $60,000, $64,000, it takes roughly $93 million to move the price by 1%. We did the math. We added it up. It would take approximately, let's call it, these numbers are off, but not by much, approximately $100 billion to move this thing a 10x, right? So do you think that potentially, let's call it $40, $50 billion of inflows could move this thing another 5x? Well, I certainly do. And we certainly see where that money could be coming from and unloading from. If we do, I don't know that we peak in December, obviously. It's just right now where we deem to be on time. And the earliest that we could adjust that would be sometime into November, the middle of November, right? But right now, we will remain on time. And if we are peaking and we do peak in December, there's a strong chance that Pi cycle is not going to get the cross. And a lot of people waiting for that Pi cycle cross at that particular time are going to be left holding the bag, whatever. But if we don't top over here and we wound up peaking out somewhere, into March, into April, as Michael presented to us. If you haven't seen that video shared on Friday, make sure you go ahead into the announcements channel. You'll find it. It's clearly marked. And, if that were happening, most likely we would be receiving a Pi cycle cross around cycle peak. William, I'm so glad that you're here. I'm so glad that you're here. That's beautiful. And what a special time it was, by the way, in 2020 during the lockdowns, as CTM was able to kind of like group up and focus up. And it was a really special time for all of us. That's for sure. I'm Robert. I'm here. And someone asked in the Discord yesterday, like, Jordan, are you going to be here in the bear market? I'm going to be here in the bear market or the bear market that ends suddenly or whatever it takes. I'm going to make sure that we, at the right time, understand when we believe that the front running begins for that 2024 cycle and maneuvering it. I'm here. I'm with you all. And we're going to do what we need to do. Like we said, people underestimate what they could do in 10 years. Overestimate what they could do in 2. I think in 2 we accomplished a lot, but in 10 we're here to create that generational wealth, and we're doing it together. So everyone, that's it for today. All right, have a beautiful day, and do it again tomorrow. May God bless you, and I'll talk to you soon.